Good morning. This is Larry McMillan with a stock market update on Monday, July 22nd. So we missed a couple of weeks with a vacation and a poker playing trip to Las Vegas. So let me just catch you up. The S&P chart is still bullish. It has pulled back in the last 3 days, but it's pulled back right to support. There's a support area between 54.40 and 54.90. It's pulled back to the top of that area, so that's sort of normal that it would test support like that. If it fails and falls below 54.40, then the last vestige of bullishness would be 53.70. Any close below that would be a change, would require a change of interpretation of the S&P chart. But right now, it is still bullish. And while it was making those new highs, it was accompanied by new highs from the cumulative volume breadth indicator. So volume was good, and that was a strong force. We've been struggling with volume along the way, breadth, volume, whatever, and those things had improved when small caps jumped into the fray. But I don't know, perhaps it came in right at the end. We'll have to see. Anyway, the equity-only put-call ratios are turning bearish. The weighted ratio has given a sell signal, and the standard ratio is right on the verge of giving one. So these are pretty powerful intermediate-term indicators, and so we are acting on that one sell signal. Also, the McMillan volatility band is generated as a sell signal because the S&P advanced so far that it got above the 4 sigma band and fell back. That generated a sell signal from there as well. Breadth overall is still clinging to a tenuous buy signal. The market is up this morning, so that's helping breadth a little bit. As I said, breadth had expanded quite a bit and gotten into overbought territory. It's working that off right now, and so we still don't have any sell signals from breadth, but it has pulled back quite a bit. The new highs versus new lows indicator on the New York Stock Exchange, that stayed bullish. New highs will continue to outnumber new lows, and so that's a positive sign. For the first time, we've seen VIX actually respond to one of these pullbacks, and VIX did jump up last week, reaching a high of 17.19 on Friday. So a couple of things here. First of all, VIX closed above its 200-day moving average, so that stopped out that previous trend to VIX buy signal, so that's no longer in place. It's not a sell signal, it's just a neutral stance at this time. However, a more positive aspect is that VIX is now in spiking mode. In other words, it's racing higher. Typically, when VIX does that and then pulls back, that generates a buy signal. So we have a trading system built around that, and it hasn't generated that buy signal yet. But when VIX pulls back at least 3 points from its highest level that it reached either at 17.19 or if it goes higher this week, then that would be a buy signal for that indicator. As far as the construct of volatility derivatives, in other words, the term structure of the VIX futures, that entire area has remained bullish for the stock market as well. So to summarize, we're still holding a core bullish position because the S&P chart is above support. We have traded some of these other confirmed sell signals around that core position, and I invite you to visit our website, take a look at our daily letters. We're having some specials now in July, and you can see how we're treating these various signals in regard to trading them around the core bullish position. Meanwhile, have a great week trading.